Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be running down some of the time frames and to see exactly what's happening on the larger time frames to give us some idea of the direction of travel for the Bitcoin price. And as per the title of the video, I'm going to be showing you why we must hold this green line over here, or Bitcoin is going to be in a lot of trouble. I'll also be having a look at the 60-day cycle and looking at the important factors that are going to be determining the end of the 60-day cycle and the beginning of the new one. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any important decisions. And today I'm going to start off with this particularly very important quotation from Michael Whitson, and that is, "You are what you eat, you are what you think, and you are what you believe." And this couldn't be truer in our aspects of our wider life as well as in Bitcoin as well. Of course, Bitcoin's got nothing to do with what you eat, but it certainly has everything to do with what you think and what you believe. So just like the outcomes you're going to get in terms of what you eat in life, i.e. the more healthier you eat, the more fitter you are, the more exercises you do, you will get the results and outcomes that you would expect by eating in that particular manner. And obviously the opposite would be true if you didn't do that. And similarly, you are what you think, that whatever you think and whatever you believe about the Bitcoin price currently, and I know that many people still think that we are in a bear market and the current last 3 months has just been a one big counter trend rally, so that we're going straight down to the $7 and the $10 and the $12,000. And if you believe that, the chances are you're probably still holding a lot of cash waiting for the right opportunity to get in. Whereas if you believe and if you think that the Bitcoin price has bottomed out at 15,400 and currently we are in the third cycle of the 60-day cycle and the long-term outlook for Bitcoin is in the bull market for the next 2 to 3 years, then the chances are you're probably fully invested and you're waiting for this pullback to end so that the next leg of the bull market can begin to higher levels, to 40 and 50,000. And so always remember that your results and outcomes in life will depend on these types of things. If you're a positive thinker, the chances are with a high degree of probability that when you come across difficulties and problems and challenges in life, then the chances are you will have more positive results and outcomes. Whereas if you're a negative thinker, then you're going to be actually approaching all your difficulties and problems in that negative vein, and the chances are your results and outcomes will reflect that. And at the end of the day, only history will tell us who is right or wrong, whether we are actually in a bull market or a bear market. So we'll have a look at all those possibilities now by looking at, firstly, the critical level at which Bitcoin must hold, otherwise Bitcoin could be in really serious trouble. So this is Bitcoin back in 2015, when this green line, the 200 simple moving average on the weekly chart, came into play and started its prominence as the most important indicator in the history of the Bitcoin charts. And what we found here was that as soon as we came at this particular line, we found always very strong support. Yes, the price did dip below it, but we never really closed below this green line. So we found support here and along here, and also all along here. So that was giving us a clue that this green line, the 200 simple moving average on the weekly chart, is going to prove very significant and relevant and important in the development of the Bitcoin price. And if we move on to 2018, when the price came back once again, after the bear market that we had in 2018 here, it was the 200 that the price came and found very strong support twice down here. Even the COVID situation found it very difficult to actually break through and close below this 200 simple moving average. So we can see that the history has always told us that this 200 is going to play a major role in the development of the Bitcoin price. Which brings us to the current price action over here. As you can see, currently we're finding strong support on this 200 simple moving average, the price of which is around about the 26,200 level. So we've come down there, breached it and touched it, and then moved away from it. So the current price is at around about 26,700, 26,800. And the reason why I say it's important is that when we did actually breach this green line here, the 200 simple moving average, that set off a series of price movements which brought the price to much lower levels, and a prolonged period over here which we actually had, i.e. we had 273 days. Once we broke below this green line, it took 273 days before we managed to come back up and recapture the 200 simple moving average over here. And this is why I say that if we actually break this critical level, it could well be another prolonged period of time over here before we recapture it one more time along this trajectory over here. And that leads us to 3 critical levels that you must be aware of that will actually determine exactly what's happening with the Bitcoin price. And that is obviously the level over here, which is around about the $31,000 mark, which has been the strong resistance point that we found along here, as this was the support over here and resistance here, and then currently we found that at this point as well. The second line obviously has to be at this neckline of the 25,200, and we nearly came back and touched that over here in the pullback that we've had over the last few weeks. And that's obviously based on what I went through last time in a very detailed way about the inverse head and shoulders pattern over here. We should really break to the upside of this, and this may well be a temporary pullback that you often get when you break a very strong neckline. The market always comes back and retests the level around those levels. It doesn't always have to come back to the obvious level of 25.2 as it is in this case. And people often ask, why is that it doesn't do that? Well, the reason for that, in my own opinion, is that when we come back after a strong break of a particular strong line, is that you get very anxious buyers who are not prepared to wait for the price to come back to those levels. And those anxious buyers basically turn that market around, and we go to higher levels and leave a lot of people who are waiting at those levels behind. And I've kept this yellow line here, which I've been showing you over the last few videos, that this is going to become a very critical level because we've been waiting for the first major peak in this cycle from the bottoming out process over here. And our target is between 40 and 50,000. And the reason why this yellow line is important is that we're expecting the price on the Fibonacci level from this top at 69,000 down to the 15,400. I've shown you many times in the last many videos now that the first major peak tends to be around this 61.8 and 78.6. And that lends to these prices over here on this yellow line. And this yellow line is based on the actual resistance here and all along on here. So we know that this yellow line is going to play some sort of a relevant and important role when the price starts to come back. If it comes around this level, at this point of the yellow line here, then the chances are we're going to top out here and have a major correction at this point. But if the price takes a bit more time to go sideways and then up, and then hits the yellow line over here, that is our cue, our trigger for the price to have a major pullback over here. So this is why this yellow line is very important that you draw this on your chart, because whenever we hit this yellow line, that is our trigger to basically, for the long-term investors, to take something off the table. Obviously, that's not a guarantee because we're talking about probabilities. There are no certainties or guarantees, but you can see that it makes logical and rational sense that a line, just like this 200 simple moving average on the weekly chart, these lines, these trend lines especially, do play a very relevant and important role to give us some sort of a clue, some sort of a guidance that this is what may happen when the price comes up to those trend lines. So it's very important you keep this trend line on here. That's going to determine this level here at around about 48, 50,000. That goes back to all this action over here. Or it's going to be around these levels here, this support, very strong support at the $40,000 mark over here. Because that means that this yellow line is providing a lot of confluence with other factors, at these points, at the 40 and the 50,000. So very important. If there's anything you want to take away from this video, always remember, and I've been mentioning this in many of my previous videos over the last few months now, that these levels of 40 and 50 are going to be absolutely critical over here. And what this yellow line does, it gives you a guide. And if we don't hit it over here at the point of confluence, and when we're coming up here, that means that the chances are, with a better degree of probability, that we're going to be coming up to this level here and hitting it there somewhere. So this yellow line is a very strong and very good and relevant and important guide for us. So apart from this level here, that we've got 31 and the 25.2, we must take into account this long doji candle over here, that this is a level that we could find support if we broke that 200 simple moving average on the weekly chart. So we could quite easily come back to this level here between 19.5 and 20,000. So if you were doing some swing trading, the first swing trade would be at the 25,200 level, because you know that's a strong neckline over here. Then the chances are, with a high degree of probability, the price is going to bounce off there to go back up towards the 31,000. So you got one good swing trade possibility with a high degree of success here. And should we break that down and lose this level, then you know that the next level is going to be here. So those who want to short could short at the break of this 25.2 with a view to buying back at the bottom of this wick here, which is at around about 19.5, 19.6. And that would be giving you a bounce back up to at least the 25, which then would become a resistant point over here. So in terms of a swing trade from this level here at 19.5, 20, you've got a potential of about a 30% increase here. Or from the 25.2 to the 31 level, you've got another 25+% increase here. So there are two opportunities here. And I would always say to people, don't trade within the range. So if the price is within the range, that's not the place to get in or out. Always wait for the levels. So if it's a support level, that's the best time to buy. And when it comes to a resistant level, that's the best time to sell. Okay, so coming to the 60-day cycle, I want to put on the volume here, because this candle, which we thought is going to be the low for this cycle, and currently it is the low because we haven't broken below this yet. And we can see quite clearly that on this candle, usually a cycle low is hit when you get a large volume, and this is exactly what we got down here on this candle. So this was one of the reasons why it convinced me that we more than likely, with a high degree of probability, actually bottomed out on this cycle here. However, since this bottom here, the price development gives me a lot of concern, and I'm going to go through exactly why. The two levels to look out for, this one and this hammer candle over here. So at this point, we had a day 45 low over here, and we expected this to go much further up, having made that low. Although it was an early low, it didn't seem right, but we don't know what the Bitcoin price is going to do. And if we had actually surpassed the previous high at 31,000, then that would have confirmed the low for the cycle here. And that would have meant that we were in a new cycle over here. However, the rejection that we got at these levels told us that this could possibly be actually an early low, and this rejection here could be a left translated cycle, which means that we've actually now topped out with this gravestone doji. From this low would have been around about 6 days. So that would have given us a 6-day cycle high if that was the case here. And we did make another attempt at this point to come to a double top. And some would say, well, that would be and most people would actually take that as the actual cycle high from this point if that was the case. So that would have given us a 12-day cycle high. And once again, that would be looked at as a left translated cycle. So this double top was really giving us a clue that we're going to be coming back down here, and that this may well be with a little insight of a failed cycle to come. However, this candle here with a long wick at the bottom, we can see that whenever we come to a bottom of a cycle, we usually get a long wick at the bottom, just like over here and over here. So that gave hope to the bulls that we were in a new cycle. However, the development of the price action here tells us maybe something else is actually brewing. If we have a closer look around here, we managed to break the top of this candle, which would have been a good sign, but the problem we got was that the candle that went above this dragonfly doji candle, i.e. with a long wick at the bottom, it didn't actually close very much higher than the top of this candle here. And what it did do was to leave a wick at the top, which means there was a rejection of higher prices. And that became a very suspicious breakout of this candle. And that's why I wasn't very convinced that when we broke above this, that yes, we broke above the top of this wick here. However, it wasn't very convincing at all. And I've been looking at the following candles to see where it might go. And the development of this red candle, which is a bearish engulfing candle over here, i.e. the highs and the lows are higher than the previous green candle here, that was giving us a clue of a downward direction. Now we haven't really had that. What we have had is a sideways action over here. And still, we haven't really resolved this because we haven't broken below this wick down here, which would confirm the failed cycle and this to be the top at day 12 of a left translated cycle. And as we saw with the 200 simple moving average, we're finding support around these levels. And without that, it would look very obvious that we're going to come back and find support on this green line, because in the previous two cycles, this is exactly what we've done over here. So it looks like a bit of a messy picture, and really it's very difficult, and I would say it really is 50-50 here, whether we move to the upside or break down towards the green line over here at around about the 25,000. And that would make sense because then that would bring it in line with the 25.2 that we've been talking about. The thing of concern is that after we did make a day 12 high over here, but what we've had is a 7-day continuous decline down into this low over here. And instead of having a bounce that you would expect over here to the upside, what we've got really is sideways action, that there isn't really much momentum in the market to carry it up, which tends to be a continuation pattern of the previous trend. And in this case, it would be this trend here. So it's come down here, created some sort of a symmetrical triangle with a view to a continuation pattern to the downside. So this is where, if you had to actually pick a bias to the upside or downside, you would say that this would be a continuation pattern more to the downside rather than to the upside. And if we run down the time frames, we can see that once we got this 8 EMA and recaptured it at this point on the 9th of January, we've maintained its support until 2 weeks ago when we lost it over here. And yesterday, it really confirmed the loss of that 8 EMA by finding resistance at the 8 EMA one more time. And we've now got an indecision candle that closed yesterday. So once again, there is a lot of indecision in the market. But the fact that we're still below the 8 EMA tells us that the trend seems to be wanting to go to the downside rather than to the upside. However, always be aware that something completely unexpected could happen, because this is exactly what happened here, that after a big fall down here, we had about 8 weeks of sideways action before we got a big Marubozu green candle to the upside here. And when we had that, we had another 8 weeks of consolidation of sideways action. Then we got this green Marubozu candle over here. So it may well be that we're actually going sideways here, and that the Bitcoin is going to surprise us with a big Marubozu candle to the upside over here. And if that takes us to the green, and if that takes us to the yellow line over here, then we know exactly where the rejection point is going to be. And if we have a look at the monthly chart, you can see quite clearly we're finding very strong support on the 8 EMA. So this trend is very strongly to the upside. And once again, the 8 EMA is right on the 25.2, 25.3 level. So coming back to the 60-day cycle, the thing I'm worried about is that we made a high over here, then we made a lower high over here, and then we tried to come back to that level, but we made another lower high here. And currently, we haven't really tested any of that trend down here. And also on the bottom side, we've made a low here and another lower low over here. So if that trend was to continue, then we more than likely are going to have another lower low over here. So only time will tell, but certainly these are the developments that I'm seeing. The trends and the direction of travel seems to be on a balanced view that this is more heading towards the downside rather than the upside. So I'm sorry I don't have a very positive picture to paint, but we have to really look at it as it is rather than what we would hope it to be. And if this was the actual cycle low here at day 45, then what we can do is to expect for the next 60 days up to here, around the 23rd of June, that would be the end of this cycle here. And what that would tell us is that this was the cycle low, this was the cycle high at day 12 or day 6 over here, whichever way you want to look at it, but it's the same thing really. So we've got a left translated cycle. It's made a low over here with a view to going to another low around about the 23rd of June, where the next 60-day cycle would be finishing if day 45 was the actual cycle low. So that would suggest that we're going to break the bottom of this candle here at around 25.8. And it could be we get a few counter trend rallies along the way down here. So this could actually suck more people in with a view to taking them down to these levels here. Okay, a quick insight for members of the Bitcoin Miners Club, and that is, you may not be aware, but on Friday, one of the Bitcoin miners, one of the main ones, Marathon Holdings, actually closed with a gravestone doji candle over here. Now I know quite a few of you are in the swing trades that we actually started in the last few videos ago, and I did mention that the only swing trade that I was in was the Cypher trade, and I got in at 208 and it actually stopped me out at 190, but since then the price for Cypher has gone up to 253, so I would have now been in a profit, but it stopped me out. And that was the only trade that I got into. But quite a few of you got into the Marathon trade, and I just want to bring something to your attention, a bit of a warning here, that this candle on Friday closed with a very strong rejection to the upside here. And of course, this week, we could quite easily, from the current price, where it closed at around 918, we could have a run up, all the way up, either halfway up to this candle here, at around $9.99, i.e. $10, or even right to the top of it before coming back down. But this is obviously a bearish candle with a bias to the downside. So if you're in a trade here, on a swing trade, then, but if I was in a profit over here, I would take 50% off the table and run the rest of it to see where it goes and set a tight stop loss at the bottom of this candle, which would be at around about the 890 level. And similar things might apply to the other Bitcoin miners as well. And once we get confirmation of exactly where the 60-day cycle has ended, then we should be able to have an opportunity to get into other swing trades with the Bitcoin miners. And if that's the kind of thing you're interested in terms of doing swing trades, and the opportunities that the Bitcoin miners present over the next 2 to 3 years on a regular basis within these 60-day cycles for Bitcoin, then all you have to do is to actually click on the join button below any of my videos over here, or in the actual description box. There's another join link here as well. And what we do on a Wednesday, we have an exclusive video just for the Bitcoin miners, and we look at the opportunities for swing trades within the 60-day cycle for Bitcoin, as well as do special features on some of the undervalued Bitcoin miners. Okay, so we'll leave it there. I hope you found value in this video. If you did, then do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.